Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are discussing the theory and the concepts for Chapter 5, which covers inventory. And specifically in this last video, we're looking at the ideas of focus on decision making. And you hear me say this at the beginning of every video, right? It's about understanding an application. When you work out a problem, and if you watch the video, you get it wrong, and you watch the video um, of the problem being worked out, that's the application part, right? And if you understand the theory, by watching the video, you should be able to see where you made your mistake in the application aspect of it. But if you don't, you still don't get it, right? Then the problem is that you have a problem with your theory. It's you don't understand the theory like you thought you should. So you need to go back and watch the theory videos, pause, rewind, you know, um, watch them again, take notes, read the book, because these are supplemental to what's in the textbook, right? You're supposed to learn from the textbook, not from the videos. This is just bringing some additional thoughts and, ramblings on my part um, on how to think about and learn this material. Me personally, I had to learn from the textbook. I didn't learn from a video, right? Because they didn't have it at that time. Um, so, you have this additional benefit, but in no way is it a replacement for, what you're learning in the book. And if you still don't get it, then obviously you need additional help, and you should be, contacting an instructor. Okay. So with that said, focus on decision making, which comes at the end of every chapter. And basically, it seems like the textbook is going to just cover additional, the focus on decision making is the analysis aspect of it. And uh, they're building slowly, right? So that, in the first chapter, you had, in the last chapter, chapter 4, you had um, three ratios. This one you have two ratios, so that as you progress, you're building one upon the other upon the other. Unlike in the math, and again, you know, you can go back up to, you can go back up to the math videos, okay? I forget which chapter it was where, you were kind of like hit with all of with a whole bunch of ratios all at one time in one chapter. Okay, so the math textbook took it as, okay, here's one chapter, here's all the ratios that we do for an analysis, and you can go back and watch those videos. Obviously it comes after inventory, chapter 18, but um, maybe that might, be additional help, and they're all in one spot. Right, but for right now, uh, we're going to look at the inventory turnover and the day sale in inventory. All right. Well, inventory turnover, and I'm going to rewrite it here, is the cost of goods sold, and we should already know what that is. And then, of course, our average inventory is this formula right here. It's the beginning inventory plus my ending inventory, and that all gets divided by 2. That's how we arrive at an average, right? So this here is all in the denominator. So that's what the formula should look like, all right? Yeah, I had to type it in this way, right? But when I'm writing it out, this is the way I'm writing it out. So when I go to do this, when I go to do this formula, right? I'm going to have, and I'll use the numbers that were in the book, all right? 90,300, right? And the beginning inventory was 13,900, and my ending inventory was 15,700. Okay, and then this is the way I would write it out. Okay, now just as a quick thought, when just like in word problems, I mean, for word problems, or even in real life, you're just going to get information. Okay, and in real life, when you get that information, you're going in you're going to have to decide what is directly useful for solving the problem, what has nothing to do with solving the problem, and then of course you have to manipulate or change, some of that information. You're going to have to do some kind of calculation, right, in order to be able to get useful information to help you solve the problem, right? So when you see a problem, what will end up happening is like for example, and I noticed it in the book because of this 13,900, that was a given. Okay, the book actually just gave it to you, and I'll have students call up and go, well, where did this number come from, right? Well, some of this information is given to you, and I'm not going to say that you should have known that that this 13,900 was a given. I mean, to a certain extent, if it was concepts that you had learned previously, then yes, you should know that this is a given information, because they're not going to go down through and, like, let's say for example, the 90,300 is cost of goods sold. All right, they just give you that information in a problem. All right, they might sit there and say, okay, your cost of goods sold is 90,300, right? Or what they can do is they can go and say, okay, you had sales of, this amount, you had discounts of this amount, and your ending inventory, was this amount, and your beginning inventory was this amount, okay? And they don't supply the cost of goods sold. Well, then you're gonna, this is information that you're gonna have to use to calculate, your cost of goods sold, all right? So just be aware of that when you're looking at a problem. You're not always given information. I mean, the whole idea is about understanding the concepts, okay? And then you have to be able to take that understanding and apply it, right? It's not history where you could go back in the book and just look stuff up and plug and play numbers, okay? You're talking about a higher level of thinking here, all right? So, this 13,900, is a given. Now, at times, depending upon the concept, you may not have covered something just yet, and they give you the information. Or at times, you can't get a complete set of books, so they just give you information. The whole idea here is that you're learning about inventory turnover. That's the concept, okay? And in learning that concept, like this here cost of goods sold, you should already have that down pat. You should know whether that's a given or what you have to do to calculate that amount. If you come across 13,900 and they're just telling you that that's the beginning inventory, you don't need to know how that's arrived at, all right? Because it's a a given amount, all right? So enough beating the dead horse about this given amount. All right, so now let me just recap here. Here is the inventory turnover formula typed out. This is the way I would write it out. Now, if I plug in the numbers like I have in the textbook, this is what it's going to look like. And of course, I have to do what's in the denominator first. And in the denominator, I'm going to add the 13,900 plus the 15,700, which is going to give me 29,600, and then I'm going to have to divide that by 2. Okay, and that's how you get an average. You take the beginning point, you take the end point, you add them together, and then you divide them by 2. Dividing by 2 is what gives you the average. Okay. So when I divide by 2, I end up with 14,800. So now in my denominator, I have 14,800, and in my numerator I have my cost of goods sold of 90,300, and when I divide one into the other, I get 6.10. Okay, and the whole idea behind this inventory turnover is, the higher, in and of itself, by having just the number, all right, and we discussed this a little bit earlier in one of the other videos, when we're actually in the last chapter, about having just one number doesn't really do you much. Okay, yeah, having an inventory turnover is 6.1, yeah, it's good. You're turning your inventory over, because if you had an inventory turnover of 0.5, you're not selling anything. Okay, but the using the ratios, if I had in 2013, if I had an inventory turnover of say 4.5, and now in 2014 I have 6.1, all right, well then obviously I'm doing something right, because I'm selling my inventory at a much greater rate. You know, I've turned it completely over 6 times. Now, bear in mind that when we're talking about turning your inventory over completely, it's not, you can be looking at the shelf and saying, okay, that item has been sitting on that shelf for 2 years. What you're talking about here is turning over your entire inventory, okay, as a dollar figure, all right? So yeah, you're going to have one item that's been sitting on the shelf for 3 years, but you're going to have these other items here where you can't keep them on the shelf, and that's what creates, a greater inventory turnover, all right? Because you're looking at the totality of your inventory as turning it over. Okay, so that's inventory turnover. And now let's talk about days sales in inventory. Okay, now the days sales in inventory, what we're looking at from that perspective is, my average inventory. So I'm going to have my average inventory divided by my cost of goods sold, which is being divided by 365. So if I'm rewriting this here formula, okay, that's how I'm writing it, right? Average inventory is in the numerator, and we know what the average inventory is because we learned how to calculate it right there, okay? And so if, obviously the parts that you need for average inventory are beginning and ending inventory. And you know what cost of goods sold are, and we just discussed that. But we're dividing our cost of goods sold by 365 first. That's in the denominator. And then we take whatever we get for that and we divide that into the average inventory. And the purpose behind this ratio is that it compares what we sell in one day to how much inventory we own on average during the entire year. So if we're using the numbers in the book, again, we were given the 13,900 plus a 15,700, and that's all divided by 2, which gives me my average inventory, okay? And then I take my cost of goods sold, which was the 90,300, and I divide that by 365, which is in the denominator. So I have to do, obviously, if I did inventory turnover, I would know that was 14,800. All right. So now I could just plug that into the day sale and inventory ratio of 14,800. Okay. And then of course I have to do the math here for the 90,300 divided by 365, which gives me like 247.39, right? And then when I divide one into the other, you end up with 60 days. And, they round that, all right? So it might have been, well, let's do it. 14.8 divided by 247.39. Yeah, you actually ended up with 59.82. So, since we're talking about 0.82 being a portion of, that 60th day, we're rounding up to 60 days, and we write rounded to know. I mean, if you put 59.82, that's correct. That's the exact, but you can round up to 60 because obviously if you use a part of a day, that's, you can consider that as the day, okay? So with this here said, what are we talking about? We're talking about, we're selling on average 60, our days sales in inventory is 60 days. As our inventories our inventory, we're turning over every 60 days. Okay, remember the inventory turnover was 6.1, right? All right. So if you take 60 times 6, that's about 360 days. So you see where how these two coincide. Yeah, you can turn, you're thinking about from the perspective of my inventory. I'm turning my entire inventory over 6 times a year. Okay, but I want to know in the number of days how quickly that happens. Okay, well, by using the day sale in inventory, we know that every 60 days I turn over the inventory. So from January 1st, if I go January to March 1st, which is 60 days, right? That means I turn over the inventory one time. So that between March 1st and April 30th, that's another 60 days. I turn the inventory over a second time. All right, 7-1, all right, that's another 60 days. I turn it over a third time. So I hope you're understanding what the relationship here is. I mean, it's important to know that how often I turn the inventory over per year. I mean, obviously, the quicker I can turn my inventory over, the more money I'm making. But I also might want to know, how long it takes me to turn over the inventory each time. Okay, and that's your day sales and inventory. Right? In this case here, we're turning the inventory over every 60 days. Okay, so I hope you understood that. Go back and let me erase here and kind of just quickly go over it again. Okay, so we said here that our inventory turnover was 6.1. In other words, we turn the entire inventory over 6 times each year. Okay, well, if I want to know how long in time, right, how long it takes me to turn the inventory over one time, okay, I use the day sale and inventory ratio, right, formula. And when I calculate that out, it tells me that for me to, it takes 60 days for me to turn over my inventory one time. And I turn it over 6 times in the year. Okay, and that's where we use the inventory turnover. Right? Now, obviously think about this. If it took me 120 days to turn over the inventory one time, right? Maybe I should do this in green. If I take 120 days to turn over the inventory one time, that means I'm not turning over my inventory 6 times a year. I'm only turning it over 3 times a year, right? 120 days times 3 is what, 360 days, right? Approximately. So the less I turn my inventory over, the longer my inventory stays the longer the inventory stays in terms of the amount of days it takes to turn it over. Okay. Obviously, the opposite side works like that. If I'm turning it over, let me use black here. If I'm turning everything over in 30 days, right? Well, then not 6 times, right? My inventory turnover is going to be 12 times, right? 30 days times, 12 is 360. So I'm turning my inventory over every month, right? And again, the more you turn it over, the more profit you're going to make. And, that's the relationship between these two. But realize that you can look at that number one time, in a vacuum by itself, and it's helpful to know that, yeah, you're turning your inventory over. But if you compare it to something else, previous months, previous years, you get a much better gauge of how your business is working. Okay, so I hope you understood that. And if not, again, watch the video again. And if you still have any additional questions, feel free to contact an instructor, and we'll move on to the assigned homework problems from here. Okay.